despite solid economic growth in Kenya, Moody's has turned its outlook on the East African nation's banking system to negative from stable. This as the rating agency considers challenges that are likely to weigh on borrowers. Christos Theofilou, who's VP and senior analyst at Moody's, joins us with greater perspective on the outlook change for Kenya's banking sector. Theo, thank you for your time and good afternoon.
Good afternoon. Pleasure to be here.
Christos, maybe let's start off by speaking about the general stability of the banking sector in Kenya and what has changed that has let Moody's look in their direction and not look so favorably upon them.
Yeah, so thank you for giving us the opportunity to speak to you about our banking system outlook on Kenya. We have changed the outlook to negative this year from stable last year, and the main drivers for the change is some challenging conditions that are affecting local households or corporates that are making the operating environment for banks more difficult this year compared to last year. In particular, a lot of the households and corporates are faced this year with rising interest rates, high inflation, foreign currency shortages. In addition, there's fiscal constraints on the government, which leads to increased taxes, lower spending by the government, and also delays in payment outstanding bills as well. All this means that borrowers' loan repayment capacity is weakening. We expect asset quality for Kenyan banks to weaken further from already elevated levels. Also, although capital is solid overall for the system, recent stress tests have indicated that there are increased vulnerabilities for some banks in the system, more so this year compared to last year. So these are the main drivers for our change in the outlook. At the same time, we recognize that overall capital remains strong. Funding and liquidity, particularly in local currency terms, is also a strength for the Kenyan banks, and this overall supports financial stability for the Kenyan banking system. So a change to negative, but overall we do expect financial stability to be maintained.
I must also ask you if we have seen a growing impairments from these banks in this high interest rate environment.
Yes, indeed. We've seen non-performing loans or problem loans by the banks increasing to over 15% at some point last year from below 13% as of year-end 2022. So some of these signs have already weighed on borrowers' loan repayment capacity, and we expect them to increase further and peak this year. Despite solid, you see solid headline economic growth in Kenya overall. So you wonder what's going on with the real economy, but you're seeing corporates reporting reduced earnings, listed corporates as well. You're seeing consumer household spending ability being weakened by the higher inflation. So we're seeing the issues that I mentioned, higher energy prices, the depreciation of the currency, likely leading to higher inflation throughout 2024. The central bank has increased its lending rates, its main policy rate, to 13% recently, an increase of more than 400 basis points overall over the past 12 months or so. All of this is leading to higher lending costs for corporates and households, and this means that their ability to repay their loans to the banks are likely will continue to be weaker than what it was previously.
What we've seen over the last few years, Christos, is that, within a high inflation environment, interest rates are increased by central banks. But there's a lagging effect there. It takes a while for those interest rates to take effect. So are we anticipating that with Kenya it will take a little bit longer than what we're seeing around the world, where we're already starting to speak of cuts?
Exactly. Kenya has although other major central banks across the world have kept interest rates stable for this year, and we're expecting a drop, Kenya has actually increased its interest rate in February and also late last year as well. And this is driven by the reasons that I mentioned: higher inflation in Kenya, around 7-8%. The depreciation in the currency has forced the central bank to take these actions. The impact on loan quality, on asset quality, is not immediate. Central banks will take some, the banks, commercial banks in the country will take some time to reprice their lending. New loans will come at a higher price. All of this would lead to more pressure on borrowers, so there will be a time lag when we see the full impact of the higher rates now in Kenya on the asset quality of banks. And that goes back to what I said. We are expecting a further increase in NPLs this year, and we are expecting them to peak at some point this year as well.
You also mentioned the issue of fiscal constraints. I think earlier this week we would have heard of, a reissuance of a bond because there's a bond that's a Euro bond that's maturing in June here. Are there links here that we are seeing between the stability of the banks and this kind of fiscal strain in Kenya?
Yeah, the fiscal constraints that I mentioned are mainly affecting the borrowers through higher taxes, through lower spending by the government, less liquidity available in the market, more delays in government payments. So all of this is a quite tangible effect of the fiscal constraints that I mentioned. We've seen, obviously, the Kenyan government has high borrowing needs over the next few months and quarters. Obviously, the Eurobond issuance, higher foreign exchange borrowing by the government is all positive for the banking system, in the sense that it will reduce the need for the government to rely only on the banking system to increase its borrowing. However, we are expecting a time lag, so we're not expecting a positive impact until the later half and towards the end of 2024. So at the moment, we're still expecting high interest rates, high inflation, foreign currency pressure to be maintained, and only gradually, with the stability of the currency, with the drop of inflation, more investor confidence with the government's recent financing, only then we expect this to ease monetary conditions towards the later part of this year for the banks.
Got you. Hope to be able to chat again in the second half of the year, Christos, where we can take stock of this. Thank you for your time. It's been a great conversation. That was Christos Theofilou. He is VP and Senior Analyst at Moody's.